Last week, we saw two bullish signs on the dollar as this upward trend line was clearly respected here. For the second time, we saw it respected once. Two times this trend line has now been respected. Not only that, the 4-hour supply zone we were referring to in last week's forecast has been removed as well. So still bullish on the US dollar as we see this trend line being respected, and we are potentially going to push to the upside, and I'll show you guys here where I think we're going in a second. So our trend line is drawn from here to here. These are reactions off of our daily trend line, but the big question is, why is this trend line being respected? I'll get into that in a second, but I just want to say, even if this trend line breaks, which is possible now since we have been hovering around the trend line, even if it breaks, I will be somewhat still bullish on the dollar from here down to this zone. But once we hit this demand zone, if we do, it'll be the time to buy the US dollar once again. So why is this trend line being respected? Well, in my view, it is being respected for two reasons. You can see this green zone down below. This is our weekly area of demand, and inside, it is inside of an overall monthly demand. You can see these dotted lines here. So that is why I'm saying if this daily trend continues, I am expecting the US dollar to at least go to this weekly supply zone at 103.06. So what we're going to watch out for next week, going to the 4-hour chart and the 1-hour chart here, we are going to look for some highs to be removed. Unfortunately, we did create a pretty big low here. I would have wanted to see this low a little bit up here because we would have had a nice trend line. I don't really like to draw trend lines too wide like this, but that is what we'll be watching out for. Basically, a break of this high is going to be a very bullish sign as far as the 4-hour chart goes. What I'm going to be watching, because it's a 1-hour chart, is this high right here, if I can just draw it properly. So if we break this high, that means we will have an upward trend line just like we have on the daily, and that's going to be even more strength. Not only because we have a 1-hour trend, because this 1-hour trend will be going with the higher time frame trends as well. So it's really all about multiple time frame, higher time frame analysis, which is what we go over a lot here on my channel. On to the forecast for the Euro US dollar. Right now we have this daily demand. It's a very old zone. It was created back in August 2025, but we had some very nice liquidity before the zone, and that's why we did see somewhat of a reaction off of it. We are failing to go any higher though, because we have this daily downward trend line in control, and it is being respected, the inverse of the DXY. Like I said as well, just the inverse. If we break the trend line, that is going to be our target for a potential short trade as far as the daily time frame goes. I am expecting this daily demand to be broken pretty easily for many reasons. One reason, I mean, it's been tested 3 times now, so it's definitely getting weaker every test. That is how supply and demand works, unlike support and resistance. Maybe you just learned something new. On the weekly time frame, we have a clear area of support down below right before our weekly demand at 1.096. So if we do get a pullback down on there, all shorts, our long-term profit target is down to this weekly demand. I'm not saying hold a day trade all the way down there. That's going to be very difficult, but a long-term profit target is at that weekly demand, and then we can talk about potentially swing trading long on the euro. As far as trading it goes now, I'm really seeing 2 setups. If we get a pullback very soon, like this week, we're most likely pulling up to this 1-hour supply at 115. It's a pretty good zone. The basing is pretty good. The move away is fantastic. So if you are bearish on the Euro US dollar, that is our supply zone for a short trade. If we remove that supply, any demand there could be used for longs, but we have to take the higher time frame into context. Don't get greedy with profit margin there. Just like the inverse of the US dollar, if we break that low, we will have a daily downward trend line, and then that trend line will be your guide for 5-minute time frame short trades. Let's say we get a massive pullback on the euro. I'm wrong. The euro is getting stronger. The US dollar is getting weaker. That's fine. I'm not even going to be that bullish on the euro because we have a pretty good 4-hour supply zone above at 116. What do you notice before the supply as well? Very clear area of resistance. So what this is it's a liquidity trap. I would like to see another reaction off of it, proving to me that there are stop losses here, and then any supply zone up or the supply zone above is going to be a pretty good supply zone for a short trade here on the Euro US dollar. On to the forecast for gold. Bottoming out here on gold on the weekly time frame. Pretty red candle here. I mean, pretty crazy, but this is a bullish sign for sure. It looks like we are going to recover here on gold. I will admit it's been a little bit tricky to trade gold. It hasn't been too much going on. We do have a daily downward trend that is in control. The issue here, I don't have a trend line. I'm not going to draw a trend line there. It's just not really within my rules, but it is looking like we are bottoming out here. Until we get a nice daily trend, I'm not going to be like hyper bullish on gold. We can still look for short trades. We just got to be a little bit cautious. The issue here is we had a very nice 4-hour upward trend line. That trend line was just barely removed on Friday there. So the next kind of big bullish move on gold would be to break this high. Then we will have some sort of upward trend line to update here. And that trend line will be our guide for day trading long on the 15-minute time frame, meaning as long as that trend line's holding, if we get it, it's going to be good for the day trading longs, like I said. As far as trading gold goes now, if you guys been following my forecast, I mean, I pointed out this demand zone here. Amazing trade off of that demand zone. Very easily caught there. Picture perfect. Hopefully you guys took that trade as well. As far as trading gold goes now, I had this supply zone for the members. I drew it out. Small move off the zone. It's looking pretty weak now. But again, this supply was called out before in the daily market breakdown video for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question. Private access to myself inside of our private Discord group where I answer all of your trading related questions. And finally, the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately. Absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So at this point, I think the move has already taken place. Most likely a break-even trade here. Not really sure what everybody did with this one. If we break this zone now, any demand down here will be a good long opportunity, especially since we are seeing gold kind of recover here. But again, we need to see these supply zones taken out. It's looking like it's going to break, but I've been trading for 6 years, guys. I've seen this react many times, even though the zone is looking weak like it is going to break. So that's what I'll be waiting for here on gold. A break of that zone. Any demand zone that breaks that is going to be a very good demand zone for a potential swing trade long on gold. Looking at the weekly chart of the S&P 500, it looks like we are falling off of a cliff here. We have recovered just a little bit, but we have to be aware of the term the dead cat bounce. We're so overextended. It looks like it is just somewhat of a bounce. There will be other signs I'll point out here in a second on the lower time frames that determine if this is actually a recovery or if we are going to pull back. My gut is telling me we could see even more downward pressure, and this is a potential buy trap because we have a nice weekly demand down below at 60.50 that I think we easily could see a move off of to the upside. And, that's where we could be headed. To me, this looks like just, an excitement, hype, whatever you want to call it. That is what we could be seeing here. However, there is a nice potential trading setup. You can see we had this downward trend line here. That downward trend line was pretty easily removed when we contacted it. And when we did break it, that left us with this demand zone down below at 64.25. The good thing about this demand as well is we have a support area right before it. This is what I call a liquidity trap, meaning what I want to see is a pullback down to this support. I want to see more reactions off of this zone, which will prove that there are potential stop losses here right into our rally-based rally 4-hour demand at 64.25. So the preferred situation is a reaction off of this support, pull back to that zone, and then a nice entry long. If we just get a pullback, don't even react off of that support, it's still a nice trading setup. As far as trade management goes here, I would be somewhat aggressive with trade management because remember on the weekly and the daily time frame, price is looking very weak. So I'm not saying that this is going to be a massive zone. But I think hybrid trade management, meaning wait for price to go 1-to-1, maybe move your stop to break even, maybe take 75% of your trade off, let it run a little bit, move your stop up with price if we do get that move. Also, if we do break this high on the 4-hour chart as well, that means we will have a 4-hour trend line. It will be pretty aggressive, but that 4-hour trend line will be our guide for 15-minute time frame long. So if you're a day trader, that's what I'd be waiting for. Let's say we don't even get a pullback down to any of these zones and we continue to push up. This is a proven supply zone over here. So if we break that supply zone, since it's proven, it's even higher odds for the demand that breaks it. So any demand zone there would be great for a pullback entry as well on the S&P 500. All right, before we get into the USDJPY, huge shout out to everyone who continues to watch the forecast. Just did another donation to my local hospice charity because all of the ad revenue from these weekly Forex forecasts are donated to my local hospice. So continue to hit that like button to get the videos growing and more ad revenue, and subscribe if you guys are new to the channel. Thank you guys so much. On the weekly chart, beautiful weekly trend line being beautifully respected. If we throw a channel tool on this weekly trend line, let's take a look at where we are at. We're actually not at a bad point. I mean, we are clearly hovering around this 50% mark of the upward channel. So pullbacks below the 50% mark would be preferred for longs, but it's still bullish. We are still going to be bullish here on the USDJPY based off of that trend. Even if we really start to see downward pressure, like as far as a deeper pullback, we have a nice little daily demand at 156.15. It's decent, not my favorite zone ever, kind of a liquidity trap before, but that would be our target for shorts, and then potentially get a nice swing trade off of that zone if we do continue to push down. As far as trading the USDJPY goes right now, the 4-hour chart's very sideways, not really seeing a whole lot, but we are in luck because on the 1-hour chart, we had a very nice trend line break. We had a nice downward trend line, very clean looking. That downward trend line was removed. It was removed by this demand with this very explosive move away. Absolutely love the move away. So if we do get a pullback down to this demand at 158.76, that would be our pullback entry long. And again, the higher time frames are very bullish. So you don't have to look for a one-to-one. We can get a bigger move off of this zone potentially. I'm not saying it's going to happen for sure. None of this is financial advice, but I'm just saying, based on the higher time frames, we could see a bigger move than expected off of a zone like that. You might have noticed this supply zone up above as well at 160.22. As far as a zone goes, it's really not bad. It removed a trend line. It removed an opposing demand zone, in my opinion. The basing is decent, and the move away is very good as well. So if we do get a pullback after that supply and you're bearish, you think, Kevin, there's no way we're going to get a move off the demand. I'm bearish the USDJPY. That's fine. I will give you guys what I would be recommendations on what I would be doing as well. So if we get a pullback up to that 1-hour supply, that will be our supply zone for a short trade. But remember the higher time frame context. I'm not expecting to see a massive move off of this zone. I think the bigger move will happen off of that demand. And I think if you want to short at this zone, if you're bearish, I think we could see a small move off of it, meaning don't get greedy. Lock in a nice trade at 1-to-1. I think that's completely reasonable. Something big has taken place in the GBPUSD. This weekly trend and trend line has finally been removed. We got the weekly candle closed down here. This trend line is officially moved. It was pretty easily predicted based off of these last 3 weeks. It was looking very, very weak. So now I think we're easily headed down to this demand at 1.27. I'm not saying we're going to tank there and just drop like a rock in the ocean or anything. I think it will be a bumpy ride down, but that is where I think we are most likely headed, and the evidence is by breaking this weekly trend line to the downside. We also have a nice daily downward trend line, and this daily downward trend line is what's making me think that we're going to continue to go even lower. As long as this daily trend line's holding, we're most likely going to pull back down to that weekly demand like I was just talking about. As far as trading the pound, I'll be honest with you guys, I'm not seeing a whole lot. I don't even like the 1-hour chart. As far as my chain analysis goes, which I'm not going to get into here in this forecast, I am not seeing too much. But the good news is we have a very blatant low and a blatant high here. I want to see this low removed. Why do I want to? I'd rather be getting in short on the pound. Again, why? Because we had that weekly trend line that was just removed. That's a bearish sign, as well as a daily downward trend. So we want to be trading with those trends on the 4-hour time frame, which means we'd be day trading as well. So to put it very simply, if we break this low, we will have a 4-hour trend line here, and that trend line will be our guide for 15-minute time frame or day trading shorts. If you want to trade a 5-minute, I think that's reasonable too. I prefer the 15 if you are going to trade a 4-hour trend line, but that is what we'll be watching out for as a group next week to see if that low can be removed, because then we will have a guide, which is the trend line. I don't really love the idea of just shorting when we have momentum. I want to see a trend line, and that is like, it's like our North Star as far as our direction goes, and as far like, and then very simply put, if we break the trend line, then we hold off on the shorts. So for now, We're just waiting for that low to be removed to give us a trend line for our guide for day trading shorts on the British pound. Another significant event here in the USDCAD, we had this downward trend line coming in from up there, and that trend line was just removed, guys. So that is definitely a bullish sign. We now have a weekly demand down below, but we have to be careful. It is a bullish sign that we have broken this trend line. However, what do you notice? We have a weekly supply zone here. And I don't think that this weekly supply is going to be responsible for pushing all the way down to the low. I think the biggest move we could see off this supply is down to our new demand, the demand that removed the trend line. So if we do get a reaction off of it, that's where I think that trade will end at 1.37. So we have to be a little bit careful with longs right now because we are so close to our higher time frame supply. Pullbacks down that weekly demand could be great for longs as well. And we could still be looking for, even though I think the zone will eventually break, I still think we can get a potential short trade here, which is what I'm going to show you guys here in a second. Daily trend, very strong, very overextended though, so that is definitely a concern. As far as the 4-hour chart goes here, this trend line is getting away from us. However, if we remove, let me just set the chart up. If we break this high, which I'll show you guys here in a second, if we break that high, this is a good enough low for me to consider this a trend line, and that trend line, again, you could day trade long that trend line, but since the weekly supply is above, if we get a trend line as we contact the weekly supply, a break of that trend line will be our 4-hour confirmation trade, guys. It's really that simple. So we're hoping to get that pullback up to that weekly supply, give us the trend line, and then we'll be waiting for that trend line as swing traders to be removed for a confirmation short trade, which we will be aggressive with trade management off of. Why aggressive? Because we are so close to the higher time frame supply zone. That is why we were aggressive on this USDCAD 1-hour trade. You can see we had a beautiful drop, base drop, explosive move away, was responsible for moving the upward trend line. Beautiful pullback to our zone. Very quick trade, 1-to-1, maybe a little bit even more. I'm not sure. It depends on how you like to manage your trades. To me, this was a quick one here as we got a nice pullback, quick entry here. Quick take profit. We didn't get greedy, and I'm glad we didn't here because the zone was removed eventually, and that is why we are not greedy, and that's why we use higher time frame context. And this trade, as you can see on the screen right now, it was called out before it took place in the daily market breakdown video for the Diamond members. And then when we remove this supply, we have created a new 1-hour demand. So down below, I had to extend the zone just a little bit. It is a little bit small, but this zone removed a proven area of supply. So if we do get a pullback to the zone, we definitely could look for longs off of it. We have to be a little bit careful though because the weekly supply is above. So even with this trade, don't target a 5-to-1, right? If your stop loss is here, you know, the trade gets triggered, 1-to-1 is hit. Maybe you have an alert set. Move your stop to break even. Take 80% of the trade off at 1-to-1. Don't get greedy. Try to ride your stop loss up with price in case we get a bigger move, and you can turn a potential quick trade into a potential pretty long swing trade. So this is our demand zone for a long trade right now in the USDCAD. And if you don't feel comfortable with just an entry, stop, and take profit, you could always wait for the zone to be hit and look for 5-minute time frame day trading confirmation inside of that 1-hour zone. On to the forecast for the Aussie US dollar. We're going to look at a weekly chart as our higher time frame here. It's the most clear. We have our rally-based rally, weekly demand. We have our explosive move away at 0.674. So that is where I think we're headed. If we do continue to see downward pressure on the Aussie, then we can switch to a potential long trade. I'm not saying this trade's going to work, you know, for a beautiful move like that, but we definitely could switch to potential swing trading longs as this demand gets hit. But for now, shorts all the way down to that weekly demand makes total sense to me as far as a higher time frame context goes. I'll be honest with you, not seeing a whole lot of trading setups, but the good news is we have a 4-hour downward trend line right now that is currently being respected. Let's throw a channel tool on this trend line to see where we are at. In my opinion, we're at a decent point to continue to look for day trading shorts. This is the 50% mark of the channel. We are hovering above that 50% mark of the channel. So as long as we're sitting above the 50% mark of the channel, 15-minute time frame shorts are good. And as long as the downward trend line is being respected, that's what we could be doing. If you are bullish on the Aussie, really the only long opportunity I'm seeing is if we break this trend line, any demand there could be good for a quick long trade, a 1-to-1. But until we get that, I'm really not seeing any signs that we should be shorting looking for longs on the Aussie US dollar. If we break that low right here, we will have an updated trend line from here to here, and then that trend line will be our guide for 15-minute time frame shorts. So I'll be honest, not a whole lot of zones right now in the Aussie. That's kind of how it's been this past week. That's the reality of trading, guys. You have to just accept that sometimes there's not going to be a lot of zones or a lot of setups some weeks. Some weeks it's going to be amazing. Some weeks it's going to be terrible. That's the reality of trading. That's the psychology aspect of trading. And if you guys need help with that, check out my podcast, the Stoic Trading Psychology Podcast. It is available anywhere you get your podcasts. I also have a YouTube channel for it as well. So if you need help with the other aspect of trading, that podcast is certainly for you. Alrighty, on to the USD Swiss. This is a pretty tricky one, and I'll explain here why. We have this weekly supply and control. It was wicked above, but I'm not going to call it removed. It's just, I don't know, it looks like just kind of an emotional, weird-looking candle, so I'm not going to remove it, but it could hold what I think we could be seeing here. And remember, look, if we zoom out, we are so overextended. So I've been saying last week, I think we could see a small move off the zone, but we are so overextended that, you know, we're quote-unquote due for a pullback really here, which I think we will get. Doesn't mean we can't catch any quick short trades, but considering when we zoom out on the weekly, we have to consider that, and if you are going to short, we definitely want to be aggressive with trade management. You can see we have this clear area of resistance before this daily supply at 0.805. So I think what we're going to see this week, depending if we get a pullback, is a reaction off of this supply to the downside. So we can be looking for short trades here on the daily time frame, which we'll be doing on the lower time frames. As far as the 4-hour chart goes here, we have a nice trend line. It was respected beautifully here. So that's why I'm always talking about, as long as this trend line's holding, day trading longs are good. And that was the thing to do here. So I hope you guys were listening last week, because we saw a beautiful respect of our 4-hour trend line. If we break that high, we will have an updated one here, but we'll keep that for another discussion. As far as the 1-hour chart goes, we have a couple little setups. I want to be very clear with this 1-hour supply above. It's a very risky setup. I'm personally avoiding it, although, yeah, we could see a small move off of it, but I'm avoiding it because this 1-hour supply is not bad, but the daily supply is sitting just above. So what usually will happen is maybe see a small move, wick to our higher time frame supply, and then get the move to the downside. If you want to get in long, which I definitely understand, we have two options. We need to wait for this supply to be removed, and any demand there would be good for long trades. You want to be somewhat aggressive with that trade management off of that long trade if we get it, based on the fact that the daily supply will most likely be in control. That is number one. Number two, you'll notice this beautiful demand down below at 0.79, perfect basing, perfect move away, removed a supply zone that wasn't that great, and that is our pullback entry for a long trade on the USD Swiss. And this is the preferred setup because it is further away from the daily supply that's sitting right above this 1-hour supply. Alrighty, looking at crude oil, this chart is just absolutely crazy. We have removed, finally, cleanly, a weekly supply, but there's really nothing to go off of here on the weekly chart or on the daily chart. It's just, it's parabolic. It's absolutely insane. When we look at the quote-unquote lower time frames, the 4-hour chart's actually looking pretty reasonable. I mean, this is obviously a very explosive move away, but what we have here is a very nice 4-hour trend line. And let me be very clear, if you are going to trade oil in these market conditions, guys, you have to be very aggressive with trade management. Don't be greedy. Don't let a move like this be like, oh, I'm going to catch a move like that. If I was trading oil and I was long down here and I only got the move from here to here, I would be stoked about that. I wouldn't be bummed out that I missed all that movement. But again, that comes from my 6 years of trading experience. So really, as long as this 4-hour trend line's holding, it's going to be our guide for 15-minute time frame longs. But what do you notice? We're sitting right at the high here of the upper channel. We're sitting right at the upper part. So to be patient, wait for the 50% mark or below the 50% mark. This is our green zone for buying on a 15-minute time frame, guys. So we have to be patient, wait for the pullback below the 50% mark. Don't chase price up here. Don't get FOMO because we missed out on the move. You're just buying at a potential top. Could price continue to go up here? Sure, but we want to stack the odds in our favor, which would be to wait to be patient here below the 50% mark, guys. That would be the preferred situation here on crude oil. On the 1-hour chart, we had a nice 1-hour downward trend line, but that was very, very short-lived. So if we do get a pullback down to our demand zone, down at 99.96, that is our pullback entry for a long trade. Quite a ways down, but anything is possible, guys. And if we do start to pull down, you might be looking, oh, where do we get in long? Well, that is our demand zone. Very nice explosive move away. Remove the trend line. It's really the only demand zone that I'm seeing right now on crude oil. But overall, definitely somewhat bullish. But just because we're bullish doesn't mean we're going to try to catch crazy 10-to-1 trades. We're still going to be aggressive with trade management due to the market conditions. All right, looking at Bitcoin last but not least, we are definitely just stalling. We are in a monthly demand right now. Not a lot going on. Couple nice weekly supply zones above. So if you are getting in long, I mean, long-term targets are up to these two supply zones on the weekly time frame. The daily chart really shows what's going on. I mean, we're just ranging here. It's really just not great at all. We're just ranging. It's very difficult to trade within a range, and that's why we've seen Bitcoin go up and down and up and down. So it hasn't really been too clear. On the 4-hour chart, we have a 4-hour demand zone that's been tested once, twice, 3, 4, 5, 6 times. So if we do remove that demand, any supply zone there is going to be a pretty nice shorting opportunity, and that's something we'll be watching out for this week. There is a 4-hour supply zone above, little hidden zone at 72,971. So if we do get a big pullback on Bitcoin, that would be our potential swing trade, short trade, if you are bearish on Bitcoin. Removing that supply would be very significant because that's going to basically be our 4-hour confirmation coming off the monthly demand. So that would be very significant here as well. We do have a 1-hour supply zone trading setup here. So if you want to be a little bit aggressive with trade management, which I understand, or aggressive with a short trade here at 68,104, I mean, this zone, it doesn't really get better than this. The basing's pretty good. Move away is fantastic. It was responsible for removing an upward trend line. So this is our 1-hour supply zone for a potential trade to the downside. So as far as Bitcoin goes, guys, this is our short trade. If we get the zone removed, any demand there is going to be a very nice potential long trade. And as far as trading the zone goes, don't get greedy. Don't target the low. Can you do that with hybrid trade management, bumping your stop loss? You definitely can. But considering the daily chart is just choppy and there's no real direction, considering that we are inside of a monthly area of demand where we could see a move off of, if you're going to short at the zone, you want to be aggressive with trade management here on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.